Hello, everybody. Let's get started right away. We're going to keep it short and sweet today. Overall, markets are flat. They were up quite a bit in the morning, but they drifted down throughout the day. The bounces, the dead cat bounce, has been very weak in the last couple of days, and it could mean that there's more downside to go here. Tesla's down 1%. S&P 500 flat, Dow Jones up 0.4%, Nasdaq flat, Russell 2000 down 1.1%. Crude oil is down 1% to $60 per barrel, and gold is just below $3,000. Let's do our quick reading. If anybody has any questions, comments, please request to speak right away. Otherwise, I'm going to read this Reuters article, maybe look at a couple of things, and then we're going to call it a day. Let's see here. Nvidia is up 2-3%. Broadcom is up about 5%. I think they announced some sort of a buyback program yesterday. And then JP Morgan is up a couple percent. And everything else is mixed. Everything else is mixed. Apple has been very volatile today and very volatile in the last couple of days. Obviously, Apple is one of the most exposed to the tariff war between US and China. Yield curve is up substantially. The 10-year Treasury yield is up about 10 basis points to 4.25. That's a massive surge in the last couple of days, even though the stock market hasn't really recovered. And the 30-year Treasury yield is now at 4.70. Interesting. I think the market is increasingly getting worried about the budget deficit, which is about $2.2 trillion today, annualized basis, and it could go up to 3 trillion if we get into a recession, which I think a lot of people are starting to agree that we might actually be in a recession right now. All right, let's read this article. Any questions, comments, please request to speak right away. Otherwise, I'm going to read this and then we're probably going to call it a day very quickly today. Give me 1 second. Stocks hit by dizzying swings as bond yields surge. Markets wrap collateral damage in Trump trade war. Hopes for a quick end to extreme volatility were dashed on Wall Street, with stocks and bonds staging big reversals after White House officials said the U.S. is moving toward with tariffs on China as high as 104%. Equities briefly erased what was earlier the largest rally since 2022. The market remained unstable as traders sought to price a global trade war amid signs Donald Trump is open to tariff deals. But negotiations won't be easy. Treasuries traded well off session lows following the wildest day since the height of the pandemic in March 2020. Yeah, volatility is continuing. It's going to continue for a while. I think this is going to take months to resolve. So be prepared for that kind of thing. I think we're going to continue to drift much lower. In my opinion, the S&P 500 could drop another 20-30% because of all this stuff. So 73% of Americans expect price surge under Trump tariffs, Reuters poll finds. Most Americans are bracing for higher prices on a wide range of consumer goods following Trump's move to impose sweeping new tariffs. The 3-day poll, which concluded on Sunday, found that 73% of respondents said they would thought prices in the next 6 months would increase for the items they buy every day after the new taxes on almost all imports took effect. Just 4% of respondents thought prices would fall, and the rest expected no change and did not answer the question. Trump's announcement last week of biggest U.S. tariff increases in decades shook Wall Street as many economists predicted they would push prices higher and could trigger a recession in the U.S. and the rest of the world. Some 57% poll response, including 1/4 response from Trump's Republican Party, said they opposed the new tariffs. Yeah, so that's not enough. If it's just 1/4 of responses from the Republican Party, that's not enough to override the bill that the Congress is trying to pass to limit Trump's efforts. So that's the problem for the markets. Trump frequently cites that view as a reason to enact new trade barriers, saying they will lead to a boom in US manufacturing. 44% of respondents said they disagreed with that view. Some 39% of respondents supported the new tariffs, and 52% said they agree with Trump administration's argument that the other countries have been taking advantage of the US when it comes to international trade. Americans have mostly split along partisan lines on whether higher tariffs are a good idea. Half of respondents, including almost all Republicans, said they agreed with the statement that any short-term economic pain is worth it to make the US stronger in the near term. Almost all Democrats disagreed. What else? What else? What else? Any questions, comments? Please request to speak. Trade tariffs are going to kick in tonight. And it looks like we're headed that way. The US forges ahead with 104% tariffs on China, says willing to talk to other countries. The US said on Tuesday that 104% duties on imports from China will take effect shortly after midnight, even as the Trump administration moved quickly to start talks with other trading partners targeted by Trump's sweeping tariff plan. The US stocks, is a reminder, Tesla Energy is heavily exposed to Trump tariffs. Tesla Energy is heavily exposed to Trump tariffs. Tesla Energy imports all batteries from China. And that's not going to change anytime soon. They may try, but their efforts to vertically integrate into manufacturing has failed miserably. And the guy who was leading the charge has left about a year or two ago. Drew Baglino. When he left, it was a big sign that this wasn't going to work. And I don't see that changing. And when the guy who was leading the Dojo program left, that was a big sign that wasn't going to work either. So on both fronts, Tesla's efforts, I think Tesla went back to the drawing board, which is never a good sign. Drawing board, which is never a good sign. US stocks retreated on the news. Global markets had previously posted gains on hopes that Trump might be willing to negotiate down an array of country and product specific trade barriers he's erecting around the world's largest consumer market. The administration has scheduled talks with South Korea and Japan, two close allies and major trading partners, and Italian Prime Minister Giorgia Meloni is due to visit next week. But the White House made clear that the country-specific tariffs of up to 50% would nevertheless take effect at 12:01 a.m. Eastern Time. Those tariffs will be especially steep for China, as Trump had ratcheted up the duties on its imports to 104% in response to counter tariffs Beijing announced last week. China has refused to bow to what it called blackmail and has vowed to fight to the end. What end? What's the end? Administration officials said they would not prioritize negotiations with the world's number two economic power. Trump's sweeping tariffs have raised fears of a recession and upended the global trading order that has been in place for decades. Right now, we've received the instruction to prioritize our allies and our trading partners like Japan, Korea, and others, White House economic advisor Kevin Hassett said on Fox News. The White House said Trump instructed his trade team to create tailor-made deals for the nearly 70 countries. Trump's lead trade negotiator, Jameson Greer, told Congress that his office is trying to work quickly, but is not facing a particular deadline. The president has been clear, again, that he's not doing exemptions or exceptions in the near term, told lawmakers. China is bracing for a war of attrition, and manufacturers are warning about profits and scrambling to plan new overseas plants, citing rising external risks. CITIC cut its 2025 China GDP growth forecast to 4.2% from 4.7%. Gantry cranes stand near shipping containers at Yangshan port outside of Shanghai, China, February 7. 3 out of 4 Americans expect prices to rise as Trump's tariff kick in, according to a Reuters poll. Chipmaker Micron told customers it will impose a tariff-related surcharge starting on Wednesday, while the U.S. clothing retailers said they are delaying orders and holding off on hiring. Running shoes made in Vietnam that now retail for $155 will cost $220 when Trump's 46% tariff on that country takes effect, according to industry groups. So I guess we're going to be just walking bare feet. Thank you, Trump. Consumers are stocking up while they can. I'm buying double of whatever, beans, canned goods, flour, you name it, Thomas Jennings said as he pushed a shopping cart through the aisles of a New Jersey Walmart. Let's actually look at what the Walmart stock is doing. Stephen, go ahead.
Hey, good morning, Iman. So, question, I mean, I don't know anything about, economy, but how fucked are we as Americans in terms of purchasing for the foreseeable future? Is everyone kind of overreacting, or should I go buy my Nikes now? I mean, in your opinion, like, are we going to see this weekend, in the supermarkets, is what I'm wondering.
Yeah, I think some of these manufacturers have been raising prices already in anticipation of these things. It's just that the tariffs came in much higher than people expected. So, yes, we are going to see a substantial increase in prices. The CPI will increase quite a bit. And I think what will follow is that consumers will not be able to spend or buy as many goods and services as they used to be able to. So, I think the GDP contraction is here. April, May, June will be very difficult for the global economy. I think it's going to get worse, not better in the near term. And also, the every single day that this goes on, the permanent damage grows. So even if, let's say, a month from now, there's a deal made, there is some permanent damage on global trade. Trust has been eroded, and that's not going to come back very easily, obviously. Stephen?
So, follow-up question, sir. What's Trump's end game here? What's he hoping to accomplish? To bring all the tariffs back to zero with all the countries? Is that what he's hoping?
Yeah, I don't know. I don't know. I think um, he wants to get rid of the trade deficit. That's what he says. And then he also wants to get rid of the budget deficit. So the two deficits are very important to obviously keep under control, if not eliminate, for longer term success. And but there's no doubt there's going to be some short term um, drop in consumption. Short term increase in inflation, short term drop in consumption, and that we'll see where things shake out. They will shake out. Like, let's say, for example, that the US indeed implemented 100% tariffs on Chinese imports, and that stayed. Okay. There's no law that says we can't insource that production. Eventually, the US would be able to handle whatever China is able to do. It's just not going to be able to do it, probably, as cheap or as good as these experienced manufacturers can. So the supply chain will have to be rewired, and that's going to take a long, long time, years, many years. But Trump has made it clear that he wants to rewire the entire global trade. He wants to reduce deficits as much as he can, if not eliminate them. And that's not going to change. Like, he's not going to back off from that. He's signaled along the way that he's not going to back off. He's been talking about this for decades. There will have to be some major, major dislocation in the financial markets, in the real economy, not just financial markets, but also in the real economy, to the extent that constituents would be begging their politicians, representatives, and senators to remove Trump from office. That's the only way he would back off from this. And I just don't see that happening because the Congress would need 67% of the votes. And Trump has a very strong hold on his base. The only thing that's changed since November are the independents. The independents have swung to the other side a little bit. The independents didn't see this tariff war coming, myself included, and they voted for Trump. And that's how he won. He won all the swing states, but the independents have swung, but that's not going to be enough. That's not going to be enough. He's got his base, which is about 20, 30, 40%, and some of the independents still. And so you're not going to be able to get 2/3 of the majority in the next 2 years. And if this continues, let's say, for example, we go into a recession, inflation is high, we go into a recession, consumption is lower, real economy has gotten a hit, unemployment rate surges in the coming months. He's going to lose the midterms, but he will have achieved what he set out to achieve in the first 2 years. Yeah. Any other questions, comments? Please request to speak. Otherwise, let's see. Farmer George asks, Yaman, if you're interested in macro spaces, David Levis is a good follow. I believe he's more bearish than you and calls for maximum to clear 2022 lows. He says Tesla's going to 25, BTC NVIDIA 2020. David Levinson, I think I've been in his spaces, just didn't find. It's very, very few. I know exactly who I want to listen to, and I built this list over the last 2-3 years on macro, and that's it. I don't really join spaces too much, other spaces. All right. Anything else? Let's see if there are any other news that we want to talk about. Give me 1 second. Brazil, Egypt, and Singapore among potential winners from tariff onslaught. Yep. Limited options push China into trade war of attrition with Trump. Okay. The US is starting to look like an emerging market after tariff shock. Euronext CEO says, yeah, good luck with that. I mean, there's no indication right now that the US dollar is still the reserve currency, and that's not going to change anytime soon. We're seeing some safety trades, people escaping. I forget the phrasing. Anyway, stocks recover after tariff-related sell-off. Bond yields up second day. Well, that was old news. I think even gold is starting to sell now. Oh, the one more thing I kind of picked up on yesterday is that Phil asked, "Do you listen to Peter Schiff?" No, he's not one of the couple dozen people I listen to on macro. So there's some evidence that, I think everyone agrees at this point that some people are getting liquidated. This is true in equities, especially Max 7, but also true in the bond market. And these forced liquidations came to a grinding halt yesterday morning because of that fake tweet or fake news that Trump was considering a 30-day pause. Okay. But the bounce, even though it was strong in 30 minutes, it hasn't continued. The bounce hasn't continued. Okay. And now that fake news has been proven wrong, Trump is going to go through with this 100% tariff on China, which is a big deal for macroeconomy. And I think liquidations will continue. And there's some indication. Okay, I'm not certain of this. This is not my view, but this is one of the people that I listen to is talking about, and he's been proven right in recent times, in recent years. There's some evidence that liquidations are on the verge of kind of like a waterfall. So let's see what happens after these tariffs kick in at midnight. I think this week, market makers have a massive incentive to keep it as stable as possible. But they may not be able to do so. And next week is a different story. And this week, we're going to hear from some banks on earnings. I think the commentary will be negative. And throughout the earnings releases in the coming weeks, I think the commentary will be very negative. So I would not be, I'm short, okay, and maybe this is bias talking, but I would not be invested in anything right now, except for maybe short-term bonds, treasury bills. Okay, with that, thank you very much, everybody. And I'll chat with you all next time. Take care.